Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. We have no change on the larger time frame as we started the week within the previous week range. On the daily, however, we have seen an interesting change as we broke lower from the 2-day balancing range that we had Thursday and Friday into the previous 3-day balancing range. Uh, Now on the broad market, I mean the overall thing that we have seen a major move down that recovers some of it. Remember that the lower side of that move has no excess, and this move today puts us in a very interesting situation because I mean what happens following this move, it will mark whatever the odds will point into the next week. Because if we go back to the upside to the earlier, well, Thursday Friday balancing range, there is a possibility that we will continue higher because this move will constitute a backing and filling and then a failed break. Now, if we continue lower, it will confirm that this whole adventure up here was a failed break, and now the destination could be the lower side of this range, which has no excess. Therefore, whatever happens next is very important for the outlook of the upcoming days. Now, looking at the market profile, we see additional details of the move that we had today. Number one, I mean, overall speaking, we have a double distribution day. And the double distribution, the lower distribution formed late in the session held with acceptance built into last week's early range. That right away is bearish. We have a break from the 2-day balance, and this is an indication that it is meaningful. Value was significantly lower for the session, and there was no overnighting the inventory correction. Remember that when we started the day, the overnight was net short. There was no meaningful correction of that exposed and signaled early on that the market was weak. Now, however, the way it happened give us a lot of detail, and it is very, very, very interesting because there was a significant amount of backing and filling required before extending outside the 2-day range. If you were looking closer, well, on A period and then transition to B, we left a poor low, which is also weak because it was pretty close to the overnight low and the Thursday low. And apparently the market got a little bit too short there, considering that the overnight was short already, and we saw a huge pushback. However, as soon as that pushback reached the 06, 07, 08 area, you can see that immediately the period after, which is C, could not even follow through and started coming back down. So if this is our first backing and filling, then you had at D the possibility of extending lower and completing the job and breaking away from balance. That did happen, but there was no follow through. E came back into the overnight range and inside the Friday range, making it questionable that if we were going to break at all. At that point, you have a significant data to say that you were failing to break. And at that point, when E goes back inside, remember that there's only 2 ticks at the high. So you try, fail, try again harder, no follow through, and you go back inside the overnight, inside the Friday's range. Everything indicates that there's a failed break. Not only that, but then the F period comes and takes the E and D highs. And then G follows through and takes that. And at that point, you had 1, 2, 3, 7 wide inside. So and with 2 ticks excess at the top. So there was a pretty good indication that it was not breaking. But then G fails. There's no follow through, and we go back outside. Now, on the G8 H and I period, there was a significant amount of back and forth. I mean, the aftermath looks pretty straightforward, extension, extension, extension. But if you were looking closely, there was a lot of give back, give back, give back, give back, and that, I mean, judging by that give back, I would say that there was a lot of accumulation of longs. Um, then, well, at the end of the day, you managed to get the extension, but not only there was significant buy-in and give back in those periods, but you retrace half of that extension pretty quick. I mean, in 2 periods, K extended, then the same K push back and L push back, and then you close the session with half of that extension retraced, and you leave a very, very thin low profile, and you only leave 3 ticks separation between the distributions. So yes, the odds suggest that we're going, I mean, there's further downside possibility. We have a double distribution that held. However, the way it happened is very questionable. I see a lot of support, although the job was kind of completed. I would give a question mark to how efficient was that job. So the focus, obviously, for tomorrow is the value development relative to the lower distribution. If we get this double distribution left today closed and we start getting acceptance above this 86 area, I think that would increase the odds of going back into this range. However, if we do get acceptance here, we erase this excess. Obviously, the odds favor the lower. An important thing to say is that it depends which one happens first. Because if we open altogether above that double distribution, that immediately will signal that that is repaired, and immediately the notes change from the close on Monday. The other possibility is that we open back inside and we push, or we open back inside the lower distribution, we go down and then we go up. There are many combinations. The most positive one is that we open above the afternoon high at 28.85 and find acceptance and move higher. The most negative scenario is that we open at or below the lower distribution and we find acceptance. As we always say, anything can happen, but the focus should be on if there is continuation on this double distribution, or if it is a rejection and we delete this important piece of information, which is this double distribution right here.